Hello, everyone. Good Saturday morning. I hope that you guys are having a fantastic weekend so far and just finished off a great week last week. So excited that you're here today. Today, we're going to have a little discussion about what frequently hangs up some investors that are starting off that are new into the space, right? There's a lot of questions that I come across when I'm talking with people who are starting to invest in real estate. And I figured today it would be a great idea for us to go in and start covering some of those items, right? So maybe what we can do is first start off with context here. A lot of people who are looking to start investing in real estate, they get intimidated, right? A lot of this is all about mindset. And I think that most people actually understand more about real estate investing than they actually think they know. So a lot of this is really not rocket science. It's just mindset, and it's just overcoming some fears and overcoming a lot of that. So in the frame of that kind of overall concept, let's go ahead and jump into some common questions that I see. Number one is, how do I pick a market? Okay, I often get that a lot, especially for people that are investing from a city that's really expensive, or they're in an area where it's just really hard for them to find property that's available. So the first thing that I would ask if you're finding a market is use some common sense and use some data tools, right? Like there's plenty of things out there that you can look. You can literally Google out there, what is a good market to invest in real estate, right? And you'll get a lot of different suggestions. Obviously, you can't believe everything that's out there on the internet for obvious reasons, but that at least gives you a place to look at, right? You have a place to be able to start looking and researching. And once you have that, you can go in and start looking at job data. Some of the things that I look for when finding a market is employment increasing? What's the average home price there? And what fits for you? Like what type of property are you willing to buy? Like if you know that you have only $50,000, you can kind of scale that back and say, okay, well, if I have $50,000 to invest in a single family home or a small multifamily, for instance, what can that afford me? And then that can kind of help drive some of your decision making in what market you're going to be picking, right? So I would have that two-way iterative approach to that. And then a really simplistic way to pick a market is, in my opinion, go ask experienced investors. So obviously that presupposes that you've done some homework and that you already have some meetups that you're lined up to, or you're connected with some people that may know people who invest. Just asking questions and being involved. Obviously, that's going to be something that saves you from a lot of headache later on. So I would highly recommend that you ask investors where they're investing and why, and that might fit just for you. That's exactly how I started. So that was question number one. Question number two is, where do I start? It seems like, there's so much to learn here, and I just don't even know how to approach this. That's question number two. I would say that in this, it's perspective and education. They kind of come hand in hand along in the context of mindset, right? I would say that give yourself a firm education on what it is, what an investment property looks like. Whether you're doing a house hack or whether you're doing rentals out of state or even in your local market, start researching, start looking at what real numbers are. And so I'm going to ask you to do a lot of underwriting, so that way you get really familiar with some of the deals and you start to understand what it is that you're trying to approach towards and move into, okay? And also, again, I'm going to nail this one more time, networking and events. The more people that you can get in contact with, the more nodes of experience that you'll have in your own knowledge, because someone can learn a lesson for you so you don't have to learn that lesson yourself. This is pretty much conventional knowledge. I would also say that when you're starting out, making sure you understand what your why is and making sure that your spouse is also on board with you if you have one. Because when things go well, that's great. Things will be going super well and you'll be able to take some of the profits, and maybe your spouse has some different ideas as to what to do with that. You, as the natural real estate investor slant who wants to reinvest everything, you're going to want to take some of that profits and keep it so that you can invest into the next property, where your spouse, they may say, well, geez, I don't see an end to this. I really want to start enjoying it now. Those are things that you kind of have to get on the same page about. That's when things are going good. If things are going bad, it's not too hard to understand what's going to happen if you have to start feeding money into an investment property, right? It's just not a good combination when your spouse isn't on board with that whole thing. If they're aligned with you in your overall vision together as a couple, then that's going to make a lot more sense, because you guys are willing to sacrifice and give each other the time, space, the money, and just the allowance and the permission to go ahead and start entrepreneuring and enterprising in this little side hustle that you may be starting up, okay? And the other thing too is Analysis paralysis, right? That's another thing. That's number 3. How do I get myself out of analysis paralysis? There is a fine line between getting yourself educated and understanding what a market offers and how to underwrite property. Once you get that down, and I'd say once you underwrite about 20 to 30 or 40 properties and just on Zillow or just somewhere else, I'd say that you have probably a good enough handle on what makes sense in the market that you're looking for to where you can start reaching out and start taking action. And I think the main thing that did it for me when I first started out investing is you have to kind of take the approach of, okay, I'm not going to hit a home run on the very first deal that I make. I don't want to make a stupid choice. Obviously, you don't want to invest in something that's going to lose you money, right? But you do want to find something that you can at least think that you can cover your downside, right? So for instance, when I bought our first rental property in California, we saw that one of the highways that was leading off of the main road to where the property was located was getting expanded. It was expanding. So that was kind of a sign to me that says, well, if this whole rental thing doesn't work out, then we can probably just put it back on the market because the highway agencies or the highway authorities here in California, they understand there's growing demand here. So they have to expand the highways, which means more demand means higher prices. So that could be one of the exit strategies for a property that I could get into. It may not cash flow from day one, or maybe it will. I don't know, but I'm not trying to hit a home run on my very first one, right? So that's one thing you need to do is remember that all the lessons you're going to learn on the first property is stuff that you don't know, okay? So I would definitely do that. And then I would say that understanding your risk tolerance, understanding how much return and reward you want to get for your risk. So obviously high risk, high return, and low risk, low return. And we'll talk about this in just a little bit. We'll talk about that on the next couple of items here. So number 4 is I can't find any properties. Okay. So what I would say for that is there's always properties out there. Yes, it's more competitive and each market is different and they have different dynamics. What I would say is that just zoom into a pocket of town where you think the path of progress is headed. You can use lots of information out there, like just go into Zillow and look at home prices, right? If you start to see home prices picking up in recent past for solds that are within, a quarter mile of where you're thinking of buying property in a certain town or city, you can use that as a data point. I would also suggest that you can use Trulia and you can use crime maps, right? And crime maps are often, I don't want to say they're 100% correlated, but if you look at crime maps, you can kind of see the edges of the safe and unsafe parts of town. And what I would do is start looking at where those are kind of like moving towards. Obviously, you want to pick areas that are on transition zones, right? And hopefully, if you've done your research, you know that the nicer part of town is spreading out, and the movement of a crime is going in the opposite direction, so that the property that you're buying on the fringe is improving versus not improving. Okay, so that's what I would say about I can't find properties. Also, increasing your network and just hitting it harder, just trying to make more phone calls, looking at more property, and spending a little bit more time or working smarter to try to find more deal flow. That's going to be one way to get more properties. The 5th one is I don't have enough money. That is just nonsense. Most of you guys who are watching this right now are working W-2 jobs, and you have more than you think. There is money in your retirement account. There's money in your IRAs. There's money locked up in your home. There's a lot of places where you can get it. So if you really need to make it happen, you can do it. And even if those are tapped out and you don't know where else to go, there are other people that you can tap into. Like you can talk to your parents, or you can talk to your uncles, or anyone who has like an investing bent. And if you get yourself educated and get yourself in a place of authority in their eyes, then they would be happy to entrust you with some money. Obviously, you have to do your homework and be very careful, and you may cut your teeth on this. But I think that that's one way to at least get started, okay? Then the 6th thing that I see, and I've got one more after this, is nothing is meeting the 1% rule. So in Bigger Pockets and in the literature everywhere out there, there's the 1% rule, which is the magical rental number, right? For single family, and it also works for multifamily too. But the magic rule is for the purchase price of $100,000, you need to be getting about 1% of that purchase price in rental income every month. So $100,000 house, if that rents for 1%, which is $1,000 a month, then that's a moneymaker, right? And so a lot of people are kind of defaulting to that, I don't want to say lazy rule of thumb that you can use to try to make money and cash flow on a property. And generally that's true right now, especially with the low interest market that we have. I would say that don't depend on that though. take some time to reflect on really what your goal is, right? Do you want cash flow or do you want appreciation? Because sometimes if you're working in a market where everyone wants to be there, that's a good thing. It just means that you're going to have to take a step back, right? Take some time and understand that you're going to be breaking even for a year or two, or even worse, right? And so you just have to kind of stick with it and let it go if you're on the appreciation side and you want to sell the property for a profit later on. If you're on the cash flow side, it's a little bit different because there you can start to just do volume, right? You start looking through properties, underwriting a lot. And I really like the cash flow approach. But honestly, the secret for me was looking for cash flow and appreciation. So you just kind of have to adjust what your strategy is going to look like. And whenever you understand what your strategy is on risk reward, make sure you communicate that to your agent and to whoever's helping you find property in the market that you're looking at. All right. Last thing I want to cover here, number 7, a frequently asked question. What should I do? Should I do single family or should I do multifamily? And this kind of touches on that risk tolerance and time versus effort balance that you have. If you know that you've got 5 kids at home, you've got a full-time job, your spouse has a business, and you just don't have any time at all to invest, then you can try to go down the high effort, high return route, right? But that probably is not going to yield results for you quick enough in the way that will be useful to you. So maybe for you, the low risk, low return, or low risk and kind of medium return, that's going to be kind of where you want to be. You want to be in places where there's going to be very low hanging fruit to invest in, so that your time is a premium, right? And you're respecting it. So what I would say is that you have a spectrum, right? On this side, you have the high effort and high return, which is doing active multifamily syndication. That means that you're pulling the deals together. You're doing, you're talking with lenders, you're talking with brokers, you're talking with other operators, you're talking with investors, and you're trying to make things happen like what I do, right? So if you want to do what I do, which is getting in front of the camera every Saturday, and then having podcasts and reaching out with brokers and investors and doing that on a daily basis and making it a true business, that's high effort, but also high return, because a lot of times when we, as these active syndicators, invest in deals, we don't have to put any of our own money in, and we end up getting quote unquote free equity, even though it's really sweat equity that we're earning. And then we end up putting cash in as well. But I was going to say that that's a high effort, high return, okay? High risk as well, I would say. Then next, after active multifamily syndication, is wholesaling. This one is high effort, but also high return. And in this particular form of real estate investing, I don't really do this, but what it is you find property for really cheap and then you sell it to someone who's interested in buying. So you're basically an intermediary, and whatever you're able to purchase a property for and whatever you're able to sell it for, that spread is yours. Okay. So that's definitely something you can do, but you got to know the market really well, and you got to be working at it for a long time and have a lot of marketing to get there. But you can essentially get yourself in and out of properties without having any kind of ownership and needing to do any kind of toilets, tenants, or any kind of property management. You're just simply transacting. You're buying and selling to buyers and sellers, essentially. Then in the middle of the road, I would say you have active small multifamily and single family. This is going to be a fit for most people who have an average amount of time and they want to be hands-on. So I would say that's right in the middle of the road. And also a single family and a small multifamily, like up to 4 units, is very easy to grasp. It's easy to understand. So a lot of people out there can easily, wrap their head around what it is that they need to do for this, what kind of repairs are needed, how the process works for closing, all that stuff. So it's a little bit lower barrier, and that's where I really like to have a lot of people start off if they want to be more hands-on, right, and get that. And you can get some really good deals too as single families, because remember, your buyers or the people that you're buying the property from are most likely just single family people that are living there, right? And so they're not sophisticated investors. Whereas on the multifamily side, most likely the owner is a multifamily owner, so they think more like a business person, which means that they're going to want higher dollar. They're probably going to be a little bit more aggressive on the terms of the purchase, and so you just got to be a little bit careful when it comes to that. Okay. And then for low effort, medium return, I would say that there is the passive multifamily investment. So working with operators, right? Working with people that already know the space well, and they have the connections, and they're able to give you an equity stake in the building in exchange for your cash, and then they run the building on your behalf. I would say it's probably the optimal choice for a lot of people out there who are working a full-time job and don't have the time to dig in to understand single family markets, get started with all of these things. Basically, all the things that we just discussed wouldn't apply to people like that, because you'd just be able to go in, park your money with someone that you trust, and then you would enjoy some of the equity ownerships of owning property with someone who can manage it professionally for you on the ownership side. Okay. So again, just to recap, active multifamily syndication, very high effort, very high return. Then you've got wholesaling. Then you have active small family and single family right here. And then you've got passive multifamily investing over here. And there are other types of investing that we didn't cover, like notes and raw land and stuff like that. But I want to keep it as simple as I can. There's also industrial and retail and triple net and all kinds of different things you can do in investing in real estate. But I'm keeping it simple with residential real estate that most of you guys are familiar with. So anyway, I think I've talked for enough, and hopefully I covered a lot of the frequently asked questions that maybe you have. If there's a question that you don't know about and you'd like to get information on, just type it in the chat here. Wherever you're listening to this, just type it in the comments. I'd be more than happy to reach out to you through social media, or you can head out to our website at elevateequity.org. We have tons of free stuff out there for you, lots of blogs, lots of content, lots of podcasts, videos, all kinds of stuff are there for you to learn how to get started, whether you want to be in the single family space or the multifamily space. And we're very passionate about helping married W-2 couples escape the rat race. So if that's more your jam, then please reach out to us. Let us know. Wherever you are, please like or subscribe. We really appreciate all of that. And with that being said, I'm going to go ahead and let you have the rest of your weekend. So thank you so much for tuning in. And it was an honor being with you. And hopefully this was useful. Thanks, guys. Have a great day.